People think the bear market officially started when Bitcoin lost 100k. It didn't. Alts have been in a bear market for almost 10 months. While AI stocks ripped, the Nasdaq hit all-time highs, and everyone convinced themselves a new cycle had just begun. The altcoin market was getting quietly dismembered. And now, for the first time this year, the macro that held everything together is finally starting to crack. This is the moment where internal crypto weakness is meeting external macro stress, and depending on what happens to tech from here, this is either a rare opportunity or officially the end of the cycle. This video is for information and entertainment only. It reflects my personal opinions and is not financial advice. Check the description for more information. Always do your own research. Let's start with the thing that's been ignored. Crypto hasn't been weak for a week. It's been weak all year. Just look at the data from Trump's election. From his election to his inauguration, we saw a true, what you could call, alt season. Alts outperformed, on average, just from this table here, 100% was the move in about 2 months. That is true crypto craziness. Since January though, most alts are down 50%. Some are down 70 or 80% from those highs. Those alts have been in a brutal bear market. They have not been able to catch a bid. Alts haven't been weak by accident. Crypto's internal liquidity engine failed a few months ago. This cycle has been all about DATs, but these companies flipped to discounts. They weren't attracting new money, and the institutional flows have faded, which has made these digital asset treasury companies compress. They are now worth less than the balances they hold. Unlocks and staking rewards have also been killing the market. These unlocks and these staking rewards have been dumped constantly into a market with almost no bid. In the last 2 months, stablecoin growth has stalled. Retail has never really returned. Search interest on Google has been dead. YouTube analytics have been flat. Just check out YouTube views now versus 2021. They are night and day different. And the biggest tell was MicroStrategy. The MicroStrategy bid on Bitcoin basically collapsed in July. For 7 months, MicroStrategy bought size every single week, all funded by tapping the bond market. Institutions happily bought the convertible debt, and MicroStrategy recycled that liquidity into Bitcoin. Then credit tightened and risk appetite vanished. The market just stopped buying up their debt. The weekly buys haven't just slowed, they've fallen 97.5% from the July peak to October. And that was the canary in the coal mine that kind of went unnoticed. MicroStrategy being unable to tap the debt markets to bid Bitcoin was a clear sign. And then came another clear signal with ETH. It managed to hold above its old all-time high for 1 hour. It closed one candle above its previous all-time high before getting completely sold off. And this is with one entity buying 3% of the entire supply. DATs and ETFs now hold about 10% of the ETH supply. So the supply is tightening, but liquidity, fresh liquidity, hasn't been coming into the market. People are still playing the 2021 playbook. This coin hasn't pumped yet, so I think it will. That playbook is dead. Crypto has run out of internal liquidity. It ran out long before this macro crack that recently happened. For years, Bitcoin is traded very tightly with the Nasdaq. The correlations have been around about 70%. They recently dropped to about 40%, but the key difference is that on normal days where there's small moves and the Nasdaq is flat to up, the relevance to Bitcoin is nominal. It's about 16%. That means that the Nasdaq has been going up without Bitcoin. But on big days where the Nasdaq moves greater than its average, the correlation between the Nasdaq and Bitcoin increases to about 60%. This means that on normal days, the Nasdaq was roughly going up and Bitcoin didn't really move. But on real macro days where there was a reason traditional markets moved up or down, Bitcoin tended to move as well. This is a big problem because if the Nasdaq starts moving outside of these ranges like we saw on Friday and like we would see if this AI bubble does eventually pop, we're going to see a big drawdown and a big drag on Bitcoin. Because for the first time since April, the macro backdrop is starting to wobble. And this time, it's not political, it's not man-made, it's not created by Trump. AI exposed companies suddenly look riskier. Credit default swaps, CDSs, are basically bankruptcy insurance for companies. And across the board, especially in the AI sector, in the last month, these have spiked. They've grown from about 10 to 30% depending on the company. Oracle, CoreWeave, these two increased about 30%. Even Microsoft, Amazon, and Google saw meaningful moves. If you then layer on the stress that's building in the private credit markets, you've suddenly got two potential major fault lines: AI capex credit risk plus subprime credit risk. Jamie Dimon said a few weeks ago, when you see one cockroach, there are usually more. And subprime lenders are breaking again. First Brands collapsed, UBS shut down 2 structured credit funds, and PrimaLend just went bankrupt. All of these private credit firms are a subprime mortgage 2.0. Private credit, very simply, is where institutions, companies, or individuals can go to get loans if a bank won't give them that loan. This obviously means the individuals that are going out and getting these private credit loans are inherently riskier. The institutions that sell these loans, the private credit firms that sell these loans, package these loans up into little boxes and they sell them on as safer investments because they've pulled a bunch of risky loans, put them in a box and sold them on. This is exactly what happened with the subprime mortgage collapse in 2008. Private credit has grown to a $3 trillion industry and actually funds some of the debt that some of these AI companies have taken on, like Oracle. If one large firm go bankrupt, oftentimes that means a lot of other firms rely on that firm for money, which blows up the entire thing. And this is all happening while the one thing holding global risk assets together, mega cap tech, is finally wobbling. The break below 100K mattered, but it's not as important as everyone's been saying. The real structural levels are probably a little bit lower. There's also a CME gap down at 92.5K, especially when BTC gets so close, these gaps get filled in. This has been a gap that's been around for a long time. The issue really is that 100K becomes resistance. Bitcoin has been in a downtrend on the daily time frame for a while now. It's been making lower lows and lower highs consistently. And unless the macro backdrop improves, which it might, there's pressure to the downside. But here's the thing people are missing. People think too binary. It's either bull market or it's not a bull market. It's on or it's off. Since the ETFs launched, Bitcoin has changed in its characteristics. There's no more 2021 style blow off tops. It's been moving in steps. It pushes up, it consolidates for a long time, usually around 250 days or so. In that consolidation, it's incredibly boring. Everybody gets angry, alts move a little bit and then get crushed. The market drains liquidity from participants, either by liquidating them or by making them so bored they just get out. The market has felt slower than ever, and that's a normal institutional bid. And this is why the dreams of all alts moving in unison have just not happened this year. Yes, we've been going through quantitative tightening, so there's been less liquidity in the market, but fundamentally, alts have not had enough liquidity to bid them up. All of the fresh liquidity that's come into the space has essentially gone into DATs, and even they have struggled once they've been listed. The reason for this large sell-off in the last few days is because the market has decided to price differently the Fed reducing rates in December. The market was pricing a 90% chance that rates would be cut in December. That has changed. It's basically now a coin flip. Markets do not like uncertainty. And because the US government shutdown starved the Fed of data, the Fed's been flying blind. And the Fed will not make rate cut adjustments if they do not have the data to support it. The major databases have been delayed, they've been incomplete, and they're missing vital pieces of data. The shift in expectations has pulled liquidity from the market, it's made tech roll over, it's backed yields up, and it's forced risk assets to crack a little bit. So Bitcoin is just reacting to that. It's not following its own chart, it's following the macro picture, which is, as I said a few weeks ago, what I think is the biggest risk to the entire market and the thing that's been holding up the entire stock market, AI, eventually cracking. If that does crack, Bitcoin and especially the altcoin market, the furthest thing out on the risk spectrum, are going to feel it even more. And here's the thing, crypto has been in a bear market basically for the last 10 months. It's been making lower highs and lower lows consistently. Tech, the last pillar, has been doing exactly the opposite. It's been in a very strong uptrend. If tech begins to wobble, alts that are already down 40 to 80% can absolutely go down another 80%. There's two paths from here. Number one, tech stabilizes. If tech stabilizes, AI credit cools down and earnings continue to hold, then fine, maybe the cycle continues. If that happens, Bitcoin will continue to rebuild, it will be absolutely fine, it will probably go up, and there'll be a small number of high quality alts that will outperform. If the subprime contagion spreads and if credit cracks continue to widen, then this isn't a dip, this is a cycle turn. And Bitcoin goes lower, alts get nuked, and surviving is the only thing you can hope for. So what am I doing? My approach is simple. As I've said many times, I don't think holding lots of tokens is a good strategy. In fact, holding lots of tokens means you are more likely to hold a portfolio that is consistent with the market at large. And what do we know about the market at large? Generally, it underperforms Bitcoin. In fact, you take on more risk and generally you do worse than Bitcoin, especially if you hold them for multiple years. So I take highly concentrated bets. I take bets on things that I have done thorough research into and I have high conviction in, and actually things that if they go down in price, I don't mind because I can just continue to accrue more of them because I really like them. Hyperliquid, I continue to buy Hype. It's a very simple thesis. They make more money than any other blockchain in the space. They use that money to rebuy their own token. There's direct value accrual back to the token. As long as their platform gets used, they will continue to make money. As long as they continue to make money, I know there's a structural bid for Hype. They're expanding their ecosystem. The team are nothing short of phenomenal. It's a very easy bet. I have always been underweight Bitcoin. It's a mistake I've made since I've been in crypto, and I've paid for it this cycle. In actual fact, if Bitcoin drops to 50K, that would be amazing for me. I would go and continue to buy Bitcoin. That would be a good thing overall. I think most people are underweight the one token, the one thing that changed the entire space. Most people don't hold enough Bitcoin. It's literally the only thing that's proven time and time and time again. I'm still holding 𝗕𝗏. I did a full show on it 5 months ago. Turns out basically everything that I put in that video, which was pure speculation, has proven to be correct. We are just waiting for it to come out of stealth. I guess there's still a risk that it isn't a Ribbit Capital project. If you want the full sort of like rundown of that, please go watch that video. And I use a portion of my capital to farm. Omni and Gravity are the two best perp dexes to farm right now. I farm in a delta neutral way, and I'm pretty sure if I can rack up a bunch of points on those platforms, just like I did with Lighter, I'm gonna get a decent reward for that. For me, doesn't matter if there is a bear market now. My strategy will remain the same. My thesis is that the structure to Bitcoin has changed. And as long as AI continues to be okay, Bitcoin will continue to follow in this step-based function. The right alts that have got clean narratives that either make money or have users and have a genuine reason to exist will do well. I see a world existing where tokens can move regardless of what's happening to Bitcoin. Tokens or crypto is essentially just businesses on chain, which should make most, especially financial businesses, much more efficient. And guess what it does? Hyperliquid is one of the most efficient companies in terms of revenue per employee in the entire world. It's not a surprise. So the fact that the whole space hangs on to what Bitcoin does, I think will eventually just sort of stop. And actually, if the thesis of Bitcoin turns out to be true anyway, Bitcoin will just get so big and so massive that it's completely decoupled from the rest of the market regardless. I don't really understand why people still use total market caps to sort of like dictate their thinking. So that is my take. If AI can hold, I think we continue to see this same kind of Bitcoin structure where it goes up, it consolidates in a relatively large range, about 40%, 40 to 50% for about 250 days. And then it has another structured move upwards, but only if TradFi continues to trend upwards. If we genuinely see private credit begin to crack in a major way and big players get taken out, or if some of these AI companies begin to default on their debt, or just the market doesn't perceive that they can repay their debt, these are big issues, and I think for sure they will spill over into crypto. As I said, what I'm doing, I don't necessarily think this is the end. I think everyone's been calling for a bubble for quite a while. I think we do continue to see easing from the Fed. I think we do continue to see a bit more liquidity come back into the market now the government shutdown is finished. I still see this cycle moving out into maybe Q1 or Q2 of next year, but you know, maybe I'm deluded. Maybe I'm just listening to idiots on the internet and actually the cycle's finished. At the end of the day, I don't know. No one really knows. We just need to take the data we've got, collect some idea, some coherent thesis, and play by that book. As I said, my book's very simple. I want to acquire more Bitcoin. I want to acquire more of the things that I have true conviction in, and I want to hold those things and I want to sell them when I've made enough money. Now, I'm only, of course, playing with money that I can afford to lose. If all of my money in crypto went to zero tomorrow, I'd be okay. I'd still have a roof over my head. I never put money into crypto that I need to feed my family or to, pay my mortgage. That's crazy. Cannot put money you can't afford to lose into this space, especially if we're in a downtrend. Because if we're in a downtrend and a bear market comes, you can expect the buys that you make to be heavily underwater for a long time. But if you believe in this space, or you have a thesis as to what you think the space is going to be like in 5 years, buying underwater for 1 year is an okay strategy. It just depends on your risk tolerance, what you want, and what you think. Please go and check out my latest podcast episode I did with 𝗕𝗟𝗅. This is a wicked conversation. He's got an incredible story. He was a millionaire at about 19 from playing poker. He quit poker and then he gave all his money away. He's now like one of the best VCs in crypto. He's incredibly smart. He's so switched on. He knows so much stuff. He talks incredibly well. It was such incredible fun shooting this episode with him. Please go and check it out. If you liked it and you listened to it, please share it with a friend. Thank you ever so much for watching. I shall see you in the next one.